If price keeps hitting your stop loss or going straight to your take profit, you're not alone, because this used to happen to me for years, and it's the most fucking annoying thing in the world to see price come, hit your stop loss, and go straight to your take profit. But eventually, after about 3 or 4 years of trading, I found a solution that not only prevented my stop loss from getting hit, it allowed me to become profitable within 3 weeks. And I've taught this to hundreds of students. I had one student who made 20k in a month using this. This is the real deal. In this video, I'm going to show you what that model is and how you can prevent your stop loss from getting hit. Right, so the reason why your stop loss keeps getting hit is because you're not waiting for something called a liquidity sweep. So most traders, they can get the direction of the market. Right. It's not that hard to get direction of the market. If you have any understanding of liquidity, you can understand there's so much stop loss orders at these highs, right? We've got quadruple highs, we've got 1, 2, 3, 4 highs here. Lots of people are shorting GBP USD. There's lots of liquidity here. Now, if you don't understand liquidity, go watch this full free 2-hour trading course, teaches you everything you need to know. But I'm assuming most of you understand liquidity. Most traders, they can get the direction right, but they mess up and they put their stop loss in the worst area, and they consistently lose and they never make money. The reason why is you're not waiting for something called a liquidity sweep. Most traders say, oh, I know what an order block is. It's the last down close candle before the up move, like that, right? So if I just buy willy-nilly like this and I put my stop loss here, I'll be nice and safe, right? And the reason, and what actually happens is price comes, hits their stop loss here, right? And let's say their target was these highs. It goes straight to their take profit. The reason it does that is because they haven't waited for something called a liquidity sweep. So what a liquidity sweep actually is, it's a fake move designed to take out stop loss orders. And this is what you'll see all the time when you're bullish. And if you don't believe me, go in your charts. What you'll see when you're bullish is you'll see price come down, take out some low with like a wick or just a few tiny little doji candles, then move off in the real direction, give you a retracement, and then shoot off. You will see that so many times when you're bullish. Go in any bull market, go in gold right now, right? As I'm recording this, which is March 1st, and my brother's birthday actually. But gold's in a bull market. Go on gold and go watch and go look for this entry pattern on the 1 minute, 5 minute, and 15 minute. And fact me later, because this pattern occurs all the time. And when you're bearish, this is what will happen, right? Price will come down like this. It will come up, take out some high, right? It will just wick above it and take out some high where your stop loss usually is. Then it will move down the real direction, and then it will give you a retracement. All the smart money traders, everybody in the know, they're entering on a fair value gap, order block, optimal trade entry around here, and they're riding price down, right? That right there is the highest probability entry, and that took me fucking 4 years to understand. So there you go. There it is, completely for free. So what you're gonna do is you're gonna wait for a liquidity sweep. Some people will say, oh, this body here, body's closing below it. Honestly, forget about market structure. Just focus on liquidity. See all these little doji candles here, these little wick candles here. That's not a market structure here, right? Look at all these little wicks here. That is a fake move designed just to take out stop loss orders. And then price shoots off during early London, and it gives us a retracement, gives us multiple retracements before shooting off in New York, right? Late New York. And this is why I love London. For me personally, so many people hate London. I think it's the easiest session to trade. I mastered that for years. I was trading London because I lived in the UK. I still do. Do what you want to do, and this works in any session, but it's really good in London. So if you can trade London, use this. Wait for a liquidity sweep. Wait for a fair value gap to form in the opposite direction. Enter on that fair value gap. So what I will look like this. Always put your stop loss at liquidity sweep low. Right? That's the whole reason I put it down. I'm gonna keep saying this because people keep asking me this. It's so annoying. We didn't just wait. Let me just get out of this. And for your take profit, by the way, you'd aim for these highs there. That's almost a 4-to-1 on a 15-minute chart as well. So imagine if you're on the 1-minute chart. You got some great entries here. And so many traders ask me this. They fucking getting angry, bro. They wait for the liquidity sweep. They see price come down, and then for some reason, whatever, they put their stop loss like all the way up here, right, on the fair value gap, or even at the order point. I'm like, what are you doing, bro? Like, the whole point of waiting for the liquidity sweep is it gives us a safe place to put your stop loss, right? The safest place, then the only place you should put your stop loss is at a liquidity sweep, high or low, right? Because a liquidity sweep, this move here, the only reason price came down here, the only reason we came down here was just to take out stop loss orders. And then smart money is buying. That's why you get all these little doji candles, and then bam, price shoots off, enter on the retracement, and ride price up, right? It's very, very unlikely that price, let's just remove this, very unlikely that price is going to come all the way, right? If price came, and this was a liquidity sweep, very unlikely that price is going to come all the way down, take out your stop loss again, and then go straight off, right? But most traders, most retail traders, 90% of traders, they're putting their stop loss at this low because there's an order block with the fair value gap. They have no idea about liquidity sweeps. They know about liquidity because you know, let's be honest, liquidity is like the new retail. Everyone knows about it. And liquidity does move the market, but most traders have no idea about liquidity sweeps or how to actually use it. Liquidity is good for giving you the target, the direction of the market, but you need a liquidity sweep before you can enter. And that is the hard part. Most people, they botch the liquidity sweep, but they get the direction right. So what you're going to do is you're always going to wait for a liquidity sweep before you enter. But this is a bullish example, and I'm going to give you a bearish example, this time on USD JPY. All right, guys, so here we are on USD JPY. Now, I was thinking of giving you guys a test, but this is a bit complicated. So right here is a beautiful piece of price action. Absolutely beautiful here. So see these equal lows? Let me just mark this out. These equal lows here, like that. Look at that, perfect equal lows. That's our liquidity. So most traders, they understand what liquidity is, right? They understand liquidity. They know the direction of the market, and they're looking to get short and looking to target this. Most traders would see, they would see this lovely bit of price action, the fair value gap, or the order block, and they would enter somewhere around here, right? And enter here, put their stop loss at this high right here, and then they would target the lows, right? Which is right. They should be targeting the lows for 3 to 1, but they have no idea what a liquidity sweep is. This right here, get this, that, but then take a screenshot of this and print it out and put it on your wall. This is a textbook bearish liquidity sweep. Look at the wicks, right? Look at this. Price comes down. It comes. Actually, let me zoom out so it's even more clear. Let's get this really well. Take a screenshot of this right now. Right, take a screenshot of this and put it on your wall somewhere so you can watch it. You guys can pause the video, can't you? So price comes down. It leaves equal lows. Look at this, equal lows. It leaves clear, obvious liquidity. It comes up, it wicks, look at the wick. It just wicks above, taking out anyone who had their stop loss orders here, right? It comes down like this. Gives us a fair value gap here, which I'll make more obvious later on. Gives us the retracement, and then bam, drops massively. That right there is the textbook most clean liquidity sweep you will ever see. That is beautiful example, right? Beautiful example in price action, right? That wick is a liquidity sweep. It just came up only to take out stop loss orders. That's the only reason that wick exists. The only reason it exists. So hopefully that's very clear. What we're going to do is we're going to remove that. You wait for the liquidity sweep, right? I'm waiting for the liquidity sweep. I'm not entering in here randomly. I'm waiting for the liquidity sweep. This time we get it in New York. And this again is textbook price action. London high, gets swept. Fair value gap forms in the opposite direction. We enter on the fair value gap. So only when this high gets swept out, only then am I going to look for my entry. Only when we have the liquidity sweep. So we've got the liquidity sweep. This wick was only there. Sweep these highs. Then I'm going to look for my entry. I'm going to look for my bearish fair value gap to form in the opposite direction. And then I'm going to enter on that, right? That is the highest probability entry you can get in all of trading. So what I'm going to do is we wait for the liquidity sweep high, right? We wait for this wick here. We wait for the liquidity sweep. We wait for the bearish fair value gap. And then I'm going to enter on this bearish fair value gap. Now you can enter on the order block. And you can get on like the 5 minute or 1 minute at this point and start looking for a better entry. Because on the 5 minute, this will probably be, you probably get like a fair value gap here, like up here. But you guys get the point. Enter here. You're going to put your stop loss at this high, right? You're not going to put it here. You're not going to put the fair value gap or at this order block high. You're going to put it at this high here. The reason you're going to do that, and I always say this, very, very unlikely a price comes up and it's a liquidity sweep because it is. Just take out these stop loss orders. That price is going to come down from all the way up, take out your stop loss again, and then go straight to your take profit. Right? Very, very unlikely that's going to happen. So the safest place and the best place and the only place you should be looking to put your stop loss is at a liquidity sweep high or low, right? Depending on if you're bearish and bullish. But for your take profit, you're going to target at least a 2 to 1 like this, right? Or a 3 to 1. Now I always target a 3 to 1. Now I know some of you might be asking, oh, you know, it's a very big entry, right, with the fair value gap. Well, there's two things. First of all, we're on the 15-minute chart. So at this point here, you can get on the lower time frame. So but in sort of like gold and, you know, futures, I trade the 1 minute for that. For Forex, I like the 15-minute and the 5-minute. But for here, you can just move your fair value gap or your entry to the midpoint of the fair value gap like this for a 4 to 1. Or you probably enter, or you just aim for a 3 to 1 at this point, right? Like that. But look, listen, and this is something that took me so long to realize. The entry pattern is the least important thing. If you've got a liquidity sweep, any entry will do. Any entry will do. So you worry about the entry, you can get the lower time frames, all that good stuff. But as long as you're waiting for the liquidity sweep, you will be good. Because that's the reason why price hits your stop loss before going straight to your take profit, because you don't wait for a liquidity sweep. So liquidity sweeps, they are pretty advanced, but I hope this right here and made it simple. If not, or if you want more information, which you probably should look at, and there's a full free 2-hour trading course, which you should go check out.